What's good, guys? Hope everyone's well. Been a while since I've done one of these video breakdowns. Been probably a few months now. I just wanted to share this trade I'm currently actually in right now, as of the time recording. It's actually a swing position. I've been in it a few weeks, but it's turned out to be a real sort of nice, sweet trade. The analysis was pretty much on point, and I'm sure you guys can resonate that. It's quite satisfying when you see analysis play out, not even like the monetary figures, just the actual your thought process prior to getting into the trade, sort of your target regions, the direction of your bias. It sort of all come in hand to hand on this trade, and it was actually a really nice trade. It's a milestone for myself. It's the highest risk reward I've taken, and banked as well. So that's obviously very positive. And I just wanted to share it with you guys. Firstly, in case anyone's wondering, like, since when have I been trading indices and so on, it's basically the start of this year. Or say like probably like December last year, I started looking. 2022 as a whole, obviously I still trade Forex, but I just haven't really liked the price on Forex. I feel like it's just been heavily manipulated and heavily one-sided. I went through a small period on EU and GU, which is what I normally trade, where I did get a little bit burnt. Had a couple of losing weeks, and it was just hard because obviously you try and react to what you're seeing and trading, but it just turns out that if you're just a seller in EU and GU, you're not making money a lot of the time, especially this year where it's just absolutely came to the downside. So I was just sort of venturing out to see if my eye could gauge, a bit more of a cleaner, nicer setup, what I can resonate with. And that's where I come into this sort of price action here on the Dow. We can see on the weekly, we had that sort of change of character, if you will, where we had this significant low. Why was that low significant and not this one? Because this low was the one that led to a new high. Okay. So yeah, obviously we made a new low, and then we made that lower high. Okay. There was a trade there. We can go down into the daily because the structure is basically the same on a fractal nature. There was a trade here. We can see all the flow got respected. Okay. For me, I didn't personally want to take a short from there, even though I was looking at it at the start of this year. Where was this? February this year. So quite a while ago now. But on the weekly, the reason I didn't want to take that lower higher trade from here was basically this weekly candle here. To me, that just looked like it grabbed a load of sell stock. Liquidity always lows here, and we could potentially have pushed one more time into the highs. So I just didn't really want to be a participant of that. When we then broke this low here and then obviously made that new low, that solidified, okay, like this is ready to go gun-ho to the downside, if you will. And daily structure is nice and beautiful. It's been, it's gone from a beautiful bullish, higher highs, higher lows, to then flipping obviously lower lows, lower higher, lower low. Okay, so if we this is obviously in a replay now, chart replay, and we're anticipating a run on 3226, which is that daily low. Okay, that's obviously an extreme target. It's not to say I didn't partial out before, because I did. I'm still in the trade now, but I took partials before. I'm not holding the full position down to there. Okay, but just a little talk on the reasoning for this trade, right? Because a lot of people, smart money traders, especially guys and girls like us, a lot of people we're going to be taking no L from there, potentially from there as well, and whatnot. But if we look at where are we within our daily price range, okay, we're at the most extreme daily block. Basically, we're at the highest premium to sell from. We're selling, we can't really sell at more of a premium. If we do, it's basically breaking structure bullish, because as far as we're concerned, this should be a protected high on the daily, okay? So we had that build of liquidity here with sort of relative equal highs. We also had a little bit sort of, I don't really like drawing trend lines, but sort of trend line-ish sort of channel, if you will, as well. So I was expecting a manipulation on that, which is obviously what we got with this wick here, and then we've filled in this imbalance. from this low to this high here, mitigate that daily block. And then obviously, as soon as we come into that mitigation, we're looking for that shift, that change of character, that bearish momentum to step in and, tell us that, okay, this is ready to go down to, this daily low here. So at this point in time, I literally just had an alert set on the point of interest. And then I went down to the 15-minute, I believe it was. Yeah, that's it, the 15-minute. And let's just jump this back up. Okay. So we have that daily block here. Okay, and just as a quick one as well, obviously I'm from the UK and from London. I actually have my charts on New York time only for indices. With FX, it's always London, like EU, GU, for instance, always London. But where we're trading in the US stock market, for me, I just have it on New York time. Obviously, I can just change it, 5 hours behind on London, but it's like 2 in the morning, 3 in the morning. It's just a little bit confusing. Whereas 9 a.m. it's just 9:30. Sorry, you just know that New York's sort of setting up and starting. So upon that explanation, if you will, obviously 9:30s is the time where equities do open up. So we experience manipulation and volatility. It's similar to like the European or London Open, and same with like New York as well. So what I normally always do is either on the 15-minute or the 30-minute, map out the key highs and lows within the most recent sort of price range, if you will. So we can see this was a low which made the new high here. So this low and also this high is a valid high, because at the end of the day, we've got that sort of rounding off motion. Okay, on the 5 minutes, a little bit more pronounced of that being a high. But obviously, we've got this highest wick here, and then we started rolling a little bit over here. So from prior to 9:30, we have a 15-minute high and 15-minute low mapped out. Okay, now what am I anticipating and expecting? Okay, because at the end of the day, all we can do is react to what price does. I'm anticipating and also hoping for the 15-minute high to get purged, to get manipulated, because then what that's going to do is obviously bring us closer to that mitigation or that daily block. Okay, as soon as we get that mitigation, we can anticipate and expect bearish price behavior on lower timeframes to come in with structure breaks and continuations. All right, that's what we're anticipating. Okay, now don't want this to go too fast. If I just play this now, and we're just waiting, sitting patient. Okay, there we go. We got that sort of run on all the buy stops, if you will, plus that mitigation. Okay, now if I jump down to the 1 minute, oh, tell you what, let me lock this quickly. Well, it will save a bit of hassle. Sorry, it's my OCD playing up here. But okay, cool. So we had that mitigation, and then we also had a break of structure, right? We had a break of structure here on the 1 minute, all right? So I'll be honest with you guys. I did take a loss here. I had the entry on this order block here with the stops just above. And if my memory, obviously this is, so the time of recording is the 9th of May, and this is the 21st of April, so a few weeks ago now. My memory served me right. We did purge this this block here. Can't remember. Either that or I must have just had a too tight of a stop. But I took a short basically on that block there. Oh, I took a short from there. The stop must have been like here, so that might have ran me where it is now. And then obviously I was targeting that daily low, so on. Okay. But I think we did purge it, if I remember rightly. We might not have. Yeah, there we go. That was the move there, which took me out my first position. And I did think, okay, is this ready to sort of come down? Okay, because technically we've made a higher high now on the 1 minute. We've flipped again to bullish structure. Okay. However, okay, so this is what I think is key to sort of explain. Hopefully you can resonate with what I'm telling you here. Because there's no reason why we shouldn't be looking. Obviously, you're buying at a very high point in the market, but at the minute, on the 1 minute now, we are bullish. Okay, we've just broken a new high. Okay, so in a discount here from this low to this high, you know, like this move here never received that 50% discount. Okay, so technically we're still in a bullish nature. Okay, so you could argue, is it counter trend, is it not? But what I'd done, the reason and the confidence for me taking the short entry was the story behind the trade. Okay, it wasn't just the base off of 1 minute. Okay, we're bearish on the weekly, we're bearish on the daily, we're at the highest possible premium at a protected high on the daily to short from. Okay, we always generically expect manipulation at these levels. Okay, in terms of breaks of structure either side, that sideways lateral movement which we've had here. Okay, and then we had that hunt on buy stops. Okay, so buyers have been taken out, sort of early sellers have been taken out of the market here. People who then smart money who got in on longs here, they've been taken out. Early sellers again, i.e. myself on that first trade, taken out of the position. So I was anticipating, okay, if this gives me any bearish sort of nature now, I'm prepared to take that risk because the higher time frame is with me, structures with me, liquidity is with me. Now it's been taken to the upside, so it makes sense now to drop. Okay, and all I was doing was waiting the bears to step in, give me a big sort of momentum shift, which was that candle there. Okay, that candle there sort of solidified to me. You know, we've taken out an internal structure low with, you know, with vindication, if you will, you know, very, very high volume. That just gave me a confidence to short. Bear in mind on the next candle. Okay, so I'm not sure if you guys are familiar with fair value gaps, but all it basically is, everyone knows it, you just might not know the names of it, but it's basically just an imbalance from A to B. So the imbalance there is a fair value gap. The reason it's a fair value gap is because we took a low out. Okay, like a fair value gap in general, like I don't know, let me just find one for instance, like here, it's not really a valid fair value gap because we didn't take out any significant higher. Okay, so like from A to B here, there is an imbalance here. But the reason that this never reacted from anything, so we never, like this candle here, never took anything significant to the left out. Okay, whereas here, we took a significant low out. Why is that significant low? Because it was at that point there where we decided to go higher in the market. So even though it's not in a discount, it's a significant low, nonetheless. Okay, we took that out with momentum and volume. Okay, and we've left that imbalance. Okay, my style of trading is I then enter on the 50% equilibrium of a gang box of that fair value gap imbalance and be wait. Now I remember, if my memory serves me right, it's been a while. I actually very nearly got FOMO on this trade because I think it mitigated and started reacting down. So we had that mitigation there. I'm not in the trade. It was that move there where I was like, oh no, I've missed this potential daily short. And I believe we did. Well, obviously we must have come back, which is there. That was actually the entry there. 354.90 was the entry. My stop was above the highs here. Okay, and then obviously just going back to the daily, we're targeting this low 3226. My actual TP, as you can see, there's 32250. It's just slightly higher. Just because you know how these markets can be at times, you're just shy of that structural high or low, and it can reverse. And I don't want to be a participant of that. I'd rather just, I would have banked a lot of reward from this trade anyway. But yeah, that was the thesis, the top down of the weekly, the top down of the daily, the rationale behind the 9:30 a.m. opening liquidity. With the highs and the lows, and then the actual entry criteria of that 1 minute fair value gap trade with momentum, and then go on. It's a prime example, okay, of how there is sometimes you won't get that 100% certainty of complete balanced pricing, because a lot of guys will be like, why are you not taking this candle here? Okay, like if I just make that like red or something. Okay, like a lot of people will take that order block there, right, and wait for that wick to come up to there. I can't remember. You might forgive me if I'm wrong. I don't think it does. Okay, and it's a perfect example, but it doesn't always have to do that. Okay, it doesn't always have to do it. Okay, as soon as we're in this vicinity here, fair value, hence the name, fair value gap, has been reached, and it's ready to either go higher or lower. Okay, I think we just start breaking down. Could be wrong. Come in again. There we go, and we start breaking down. Anyway, like, I'm obviously not going to jump on a 1 minute and show you this because it's going to take forever. But that was basically the understanding, right, of the high time frame down to the actual specific entry point. Okay. Now we might as well jump to the daily because this will just take too long otherwise. Make this. Why is that not showing on the daily? Oh, okay. It's not big enough. It's always when you bloody start recording that this stuff happens. Sorry guys, 1 second. Let's whack that across. Yeah, that should be fine now. There we go. Perfect. Okay, so obviously that looks pretty ridiculous. Something which I'm quite proud of, that sort of that wick in here. And if we actually look on the, if we let a couple of days go by here, so obviously we're looking at, I think it's a 1 to 81. Yeah, 1 to 81 risk to reward, which is phenomenal. It's, you know, these trades come around rarely. Do you know what I mean? Very, very rarely, like 1 to quarter, if that. But if we look at the weekly, this is what I'm saying as well, why this higher block made sense. We had weekly high here. We purged that weekly higher. We basically caught the high of the week. I'll just zoom in. I don't know if you guys can see. We've caught that high of the week here. And obviously then we closed the low of the week. And that actually all happened, if I remember rightly, I think that all happened on a Friday. It might have been a Thursday or a Friday, which is pretty mad. So like, we took, it basically just went sideways the whole week. And then on Friday, we took the whole entire week higher from the left. We took the 1, 2, 3, we took up 3 weeks highs out. And then we flipped over to the bearish side and took all the lows out as well. It's pretty mad. Very, very big volume. Very big volume move. And yeah, obviously we're targeting this low here, and we're still holding now. We had a little bit of sideways movement, I believe, coming up, building liquidity. And I'm actually still holding now. So we can wait and see. Yeah, this is live PA now, guys. So we're nearly at that target. Just thinking out loud now, current thoughts. Obviously we've taken out from this today right now, we've taken out 2 daily lows out, which are relative lows as well. So we can anticipate there might be a potential retracement today to give us, again, another premium. One thing I like, and I actually hope so I can scale into the trade, is that we have all these buy stops here. We've got all these daily highs here waiting to get ran. What would be nice, instead of actually taking this low out now, if we get that run up into the into these buy stops, take them all out. You know, again, this is a fair value gap here. Okay, we have very slightly come into that gap, hence why, again, this is the reasoning why it was able to do this run. Okay, that's why it's able to do it. Okay, price didn't have to come all the way to here to balance here to then go short. It can do that 100%, but it doesn't have to. Okay, that's something which I had to get my head around when I was learning this also. Okay, that this imbalance is enough for it to continue lower. However, saying that, like I said, I like to enter on the 50% of the imbalance. I think as far as I look from here to here, it just so happens to sort of come in conjunction with a variation of an order block, as we know, as well as it's a little bit of a key level. If we look left in the market, you know, sort of here to here, if we just bring that across, you know, it's constant support, resistance, and so on. It's, you know, a very key level. So I was actually looking to potentially scale into this trade and jump here as well. And very lastly, what I want to say on the daily structure, right? Not that I've really ever traded, but we do have sort of the Elliott wave sort of theme. What you seem to consistently sort of get in stocks, where we've got that A, B, C, lastly D, and that final push into E, that continuation, and then obviously the new sort of structure shifts generically anyway. But what would be nice is that liquidation on longs, that liquidation on that liquidation on shorts to get all the buy stops out of these regions here, mitigate more of that imbalance, potentially mitigate the order block, and then scale in and potentially capitalize off this move as well. Obviously, not trying to provide any signals or anything, but yeah, just bear that in mind. That could potentially be a very nice trade if we don't take this low out. So something for you guys to maybe back test, forward test, have a little look at. And yeah, guys, so I'll just show you as well. So it's 354.90 on here. If I stop here and then come onto my share my screen on MetaTrader. Hopefully you guys can see that as well. It's just current sort of there you go, 354.90.60 here on NC5.